Hello, this is Rob with Federal Finance CPE. Today, we're covering the SF-133, essentially the federal government's report card on budget execution. You can almost feel the tension in the air as October rolls around each year. Agency accountants and budget officers stare at spreadsheets. Treasury and OMB analysts wait for data to roll in, and somewhere an auditor is mentally preparing questions. At the center of all this is the SF-133, a simple form that holds together federal budget execution, accountability, and auditability. It's also one of the most consistent and comprehensive tools the government has for translating financial activity into budget terms. By the end of this course, you'll understand what the SF-133 is, why it exists, when and how it's submitted, and most importantly, how to read it and build one using the USSGL Crosswalk. So what is the SF-133? The SF-133, formerly called the Report on Budget Execution and Budgetary Resources, tracks how agencies execute their budgets and use their funding. It fulfills several legal requirements for the executive branch and serves as the key document that connects your agency's financial statements to actual spending. The SF-133 fulfills the following requirements. First, it ensures the President reviews federal expenditures at least 4 times per year as required by law. Second, it reports on unliquidated obligations, unobligated balances, canceled balances, and adjustments made to appropriation accounts during completed fiscal years. Third, it monitors the status of funds that were apportioned in the SF-132 apportionment and reapportionment schedule, as well as funds that were not apportioned. Beyond legal compliance, this report provides a consistent presentation of information across every agency. That consistency matters. It allows for consolidation and comparison across the federal government. It creates a historical reference that's extremely useful when the president's budget is being prepared, and it helps budgeteers in Congress and even private citizens identify patterns and obligations. Finally, and this is critical for financial statement preparers, the SF-133 helps you tie your agency's financial statement directly to budget execution. Specifically, you'll use it to reconcile with the Statement of Budgetary Resources. There are 4 sections of the SF-133. Before we dive into the details, let's establish the framework. The SF-133 consists of 4 sections. Section 1, Budgetary Resources. This section shows whether budgetary resources are available for obligation or not. Section 2, Status of Budgetary Resources. This section shows whether budgetary resources have been obligated or not. Section 3, Change in Obligated Balance. This section shows whether obligated balances have changed during the period. And Section 4, Budget Authority and Outlays Net. This section shows whether obligated balances have been outlaid or not. Now here's something important to understand. There's a common thread across the 3 main federal budget reports, the SF-132, the SF-133, and the Statement. The Budgetary Resources section is the only section that's common across all 3 reports. The SF-133 and the SBR also share the Status of Budgetary Resources section. The remaining sections of the SF-133, Change in Obligated Balance, and Budget Authority and Outlays Net are unique to the SF-133 and are not shared on the SBR or the SF-132. So when do you submit an SF-133? Well, you need to submit an SF-133 for your unexpired Treasury Appropriation Fund symbols, or TAFs, your expired TAFs, both apportioned TAFs and those that have not been apportioned, credit program financing, and liquidating TAFs. You do not submit an SF-133 for deposit fund accounts, receipt accounts including clearing accounts and suspense accounts, closed TAFs, which are TAFs with canceled balances. Just remember, when a fund is in its period of availability, it's unexpired. For 5 years after that period end, it is expired. After that 5th expired year, you cancel the funds. That's a closed TAFs. How are SF-133s submitted? SF-133s are electronic submitted through Treasury's government-wide Treasury Account Symbol Adjusted Trial Balance System, GTAS. This system allows agencies to submit reports in one centralized location, perform edit checks, and standardize reporting across the government. Let me show you what this looks like in practice. Here's the actual GTAS reporting schedule for fiscal year 24. You can see the reporting windows laid out month by month, when submissions open, when they're due, and when Treasury closes the window for each period. Now, OMB Circular A-11 requires this information quarterly, but agencies report monthly. Why? Monthly reporting facilitates several essential benefits. First, it helps Treasury meet OMB's requirements by allowing them to compile financial reports in a timely and accurate manner. Monthly submissions alleviate the year-end burden. Second, it allows Treasury to perform month-to-month analysis on agency data, which helps the Fiscal Service address open audit findings related to compilation of financial report of the United States government. Third, it helps identify issues earlier in the fiscal year so Treasury can address them before the year end, again, alleviating that year-end crunch. Finally, it supports OMB's budget submission requirements and the associated deadlines for working with Congress, and it allows agencies to be more accurate and efficient with loading their data. Now, what does this mean for you practically? You're on a monthly close cycle for budgetary reporting. Each month, you need to ensure your USSGL trial balance is clean, your attributes are accurate, and your data is ready to submit. The good news is that monthly reporting gives you multiple opportunities to catch and fix errors before year end, when the stakes are the highest. Your monthly rhythm also means you can track your obligations and outlay patterns throughout the year. This is especially important during continuing resolutions or when you're monitoring spending against apportionments. You'll see trends emerge that help you manage your budget execution more effectively. The reporting schedule. You report for 11 months of the year. Reporting happens from November through October, but you're always reporting the previous month's data. So in early December, you report October and November. In January, you report December, and so on. Until early October, when you report September. In October, there's also a period 12 revision window. So if you actually had to report for 12 months straight throughout the years, you'd be trying to report GTAS data for October while also still potentially closing your books and doing financial reporting for the prior fiscal year. And that would be a mess. So this 11-month schedule gives you some breathing room by having that first GTAS submission in December. Creating the SF-133, the USSGL Crosswalk. Now let's get into the mechanics of how the report is created. Agencies create the SF-133 themselves, and the process is formulaic. Treasury provides a crosswalk of USSGL accounts and account attributes that map to the various lines of the SF-133. Finding the crosswalk. To find the crosswalk, navigate to the Treasury Financial Manual USSGL Supplement. Go to Part 1, which covers the current fiscal year for reporting. Then navigate to Section 5, USSGL Crosswalks to Standard External Reports. From there, select SF-133 Report on Budget Execution and Budgetary Resources and Schedule P Budget Program and Financing Schedule. You should be aware that the SF-133 and Schedule P are presented in the same crosswalk. You'll have two format options for this crosswalk, Excel and PDF. Choose whichever works best for your purposes, though you might find having the ability to filter in Excel to be choose whichever works best for your purposes, but having the ability to filter in Excel makes it my number one choice. When you open the crosswalk, the first thing to notice are the column headers. Let me walk through the columns that you see. Associated report. This column will show either S for SF-133, P for Schedule P, or S/P for both. If you're creating the SF-133, you need lines marked with S or S/P. If it only shows P, that's Schedule P, and you do not need to use these lines for the SF-133. The next column is line number. This is self-explanatory. This is the line number of the report that row is being reported on. USSGL account. This is the 6-digit USSGL account that everyone in the federal government uses. Account title. The title that maps to the USSGL account. Now we get into the account attributes. These are critical for understanding how to populate the SF-133 correctly. Now let's explain the account attributes. Begin end indicator. This indicates whether the balances or the USSGL. This indicates whether the balances or the USSGL account attributes combination is at the start of the fiscal year or at the end. You'll see either B for beginning balance or E for ending balance. If it says B, use the beginning balance of the fiscal year. If it says E, use the ending balance for the reporting period. Debit credit indicator. This indicates whether the balance is reported as a debit or a credit. C is for credit, D is for debit. Reimbursable flag. This indicates whether the amounts for goods, services, or joint project support are financed by offsetting collections. D means direct, R means reimbursable. If your line has D, you only report direct balances. If it has R, report only reimbursable. If it shows D/R, you report both. Apportionment category code. These are identified by OMB for apportionments. The codes are A for Category A, quarterly apportionments, B for Category B, apportionments other than quarterly, and E for exempt from apportionment. Note that these codes differ from what you see on the SF-130, which uses A, B, and C. For USSGL account attributes, you have A, B, and E. Authority type code. This distinguishes among various types of budgetary resources when it's not possible to do so by USSGL account alone. For example, USSGL rescission accounts 43920 and 43930 don't distinguish between rescissions of appropriations or contract authority. So you need this attribute. The codes are as follows. B for borrowing authority, C contract authority, D advance appropriation, E appropriation advance funding available in prior year, F appropriation available from the subsequent year, P appropriation excluding advance funding, R reappropriation, S, spending authority from offsetting collections, and X, transfer of borrowing authority converted to cash. When reporting USSGL values, use this authority type to determine what's actually reported. If it says B, you only report values with authority type B. If it says R, only report values with R. Availability time indicator. This indicates whether budgetary resources is available for new obligations in the current period or in a subsequent period in the fiscal year, or after being reapportioned in a future year. Means available in the current period. S means available in the subsequent period. BEA category indicator. This indicates at the USSGL level whether the Budget Enforcement Act category is discretionary or mandatory. D means discretionary, M means mandatory. Borrowing source code. This indicates whether borrowing took place from the public, Treasury, or federal financing bank. F means federal financing bank, P means public, and T means Treasury. Federal, non-federal code. This indicates the type of entity involved in the transaction with your reporting entity. The possible combinations are E, non-federal exemption, F, federal, G, general fund of the U.S. government, N, non-federal, Z, non-reciprocating federal activity. Year of Budget Authority Indicator or Year of BA. This identifies whether outlays are made from new budget authority or from budget authority carried forward from the prior year, used for expenditure tasks that are not credit financing tasks. BAL means outlays from balances brought forward, while NEW means outlays from new budget authority. Prior year adjustment code. This shows changes to obligated or unobligated balances that occurred in previous fiscal years, but were not recorded appropriately as of October 1st of the current fiscal year. This excludes upward and downward adjustments to current year, prior year obligations, and most reclassifications from clearing accounts. B equals adjustment to prior year reporting, backdated in the Treasury Central Accounting System. P means adjustment to prior year reporting not backdated in the Treasury Central Accounting System. And N, not an adjustment to prior year reporting. Reduction type code. This represents the type of reduction being reported across the board, sequestration, or other. So the values are ATB, which means across the board reduction, OTR, reductions other than ATB, SQ, sequestration, or X, not applicable. TAF's status code. This shows whether your fund is expired, unexpired, or canceled. An unexpired fund is in the time period where budgetary authority is available for new obligations. An expired fund is in the time period where budget authority cannot be used for new obligations but can be still dispersed. And a canceled fund is in the time period after the last expired year where the account is closed and balances are canceled and the authority to disperse is no longer available. The codes are C for canceled, E for expired, and U for unexpired. TAF's status for Schedule P. If you're creating the SF-133, you can disregard this column. It's very similar to the TAF status for SF-133, but uses different criteria. Just ignore it for SF-133 purposes. TAF's status transitioning code. This tells you whether the TAFs is transitioning to expiring or transitioning to canceling. Expiring applies to annual and multi-year accounts. The TAF's status transitioning flag is set to expire in period 12 of the ending year of availability. Canceling applies to annual and multi-year TAFs accounts. For these accounts, the TAF status transitioning code is set to canceling in period 12 of the 5th expired year. Not applicable applies to know your funds or when the fund is not about to expire or be canceled. GTAS Type Code. Fund Type Code is a classification established by law that describes an OMB account's relationship to the government and the source of receipts that the account receives. The possible values are CF for clearing account, DF for deposit fund, EC for consolidated working fund, EG for general fund, EM for management fund, EP for public enterprise revolving fund, ER for intergovernmental revolving fund, ES for special fund, ET for trust non-revolving fund, GA for general fund of the U.S. government authority, MR for miscellaneous unavailable receipts, TR trust revolving fund, and an unavailable general fund receipt, US for unavailable special fund receipt, and UT unavailable trust non-revolving fund receipt. Financing account code. This indicates whether the federal account symbol is a direct loan financing account, a guaranteed loan financing account, or not a financing account as defined by the Federal Credit Reform Act of 1990. The values are D for direct, G for guaranteed, and N for non-financing. Now, debit and credit columns. These columns will show either a plus or a minus sign. This tells you whether the debit is reported as a positive or negative number. Similarly for credit, plus means positive and minus means negative for reporting purposes. Additional information. The last column contains footnotes for various lines. If you see a number here, scroll to the bottom of the crosswalk and find the relevant number to read the footnote. For example, footnote 1 says, when the SF-133 or Schedule P line numbers use both a beginning B and ending E balance for the same USSGL account, the beginning balance is subtracted from the ending balance. These instructions are vital for preparing the SF-133 correctly. Seeing the crosswalk in action. As you scroll through the crosswalk, you'll see various lines that show a number of USSGL accounts and combinations of attributes that total to each line. You'll see all 4 sections we mentioned earlier noted. As you create the SF-133, these are lines you'll see. Let me show you how to use this crosswalk with a concrete example. And this is where it goes from theory to practice. Okay. What you'll see here is the USSGL, SF-133, and Schedule P crosswalk. Let's scroll down and look at the first line that is associated with the SF-133. And that's going to be line number 1000, unobligated balance brought forward October 1. We'll just look here at we'll look at USSGL account 413900, contract authority carried forward. We can see the beginning indicator for beginning ending. It's a debit and it's direct. These open attribute or these blank, if the attribute doesn't have a value in it, that just means that there's nothing to pick from and it does not apply for that USSGL account. You can see the BEA category is D or M. And then the next category that has a restriction on it is TAS status for SF-133. We only report those with U. And the transitioning code is X or N. The fund type, we have a few. It's EGEPERESET. Our financing code account is N, and our debits are reported as positive and our credits are reported as negative. And we have one additional note, which is footnote 3, which we'll scroll down and see what is footnote 3. And footnote 3 says, the total of the specified balances in the USSGL accounts for this line should equal the beginning balances of USSGL accounts 445000, 465000, and 462000. So these are some edit checks that you can do. Let's look at one more on a different line. All right, we're going to look at line 4100, outlays from new mandatory authority. We're going to look at these first two, 480200, undelivered orders, obligations, prepaid advance. You'll see we'll look at the first two lines together because I think it'll help us visualize this. We have one for ending and one for beginning. We report debit and credit. We have reimbursable direct, apportionment categories A, B, E, so all of them. We have nothing to worry about for authority type, availability time. Our next code that has a value is the BEA category. We have M. And then when we have year of budget authority, it's new. Prior year adjustment, we have X. Only report the X's. Our TAS status, SF-133, we have U for unexpired. Our fund type, we have a number of funds on here. You can see the financing code account is N. Now you'll see here, so here's where some differences come in, just for you to be aware. So for the 480200 ending balances, the debits are recorded as a negative and the credits are positive. So for the ending balance, we have our debits are recorded as a negative and our credits are reported as a positive, while our beginning balances, the debits are recorded as positives and the credits are reported as negative. This is important. And remember, and we'll see this online on footnote 1, but when you have a beginning and ending balance, the same USSGL account, you take the ending balance minus the beginning. But let's scroll down and see these two footnotes, 1 and 18. Okay, 1. When the SF-133 Schedule P line numbers use both beginning B and ending E balance for the same USSGL account, the beginning balance is subtracted from the ending balance. Okay? And let's see what line 18 says, or footnote 18 says. Domain value D for debit in the GTAS attribute debit credit column is only available to fund families at the budget object class level. While this abnormal balance is permitted at a BOC budget object class level, it is not permitted at the TAS level. Agencies are required to pass the fatal GTAS edit 217. Okay, the key takeaway here is that you're not just looking at the USSGL account number and balance. You need to look at the entire combination of account plus attributes. That's what makes the crosswalk so powerful, and that's why it's essential to have your attributes maintained correctly in your financial system. Viewing actual SF-133 reports. The best way to visualize this is to see an actual example. SF-133s are publicly available for the most part, and you can find them on OMB Max's website. An easy way to find is just to search online for SF-133, and you'll find the OMB Max site at portal.max.gov. When you get to the website, you'll immediately see the SF-133 reports organized by fiscal year. Let's look at fiscal year 2024. We'll scroll down to other independent agencies and find a small agency, the Marine Mammal Commission. Now, you have the option of clicking Excel or a zip file for quarterly XML reports, but I recommend the monthly Excel report. Now, how to understand this report. When you open the Excel file, there are several tabs. The Instructions tab, which tells you how to read this particular SF-133. There's Task Detail. that shows individual TAFs at level. There's account total, bureau total, agency total, and raw data. This is the unfiltered data. These are all essentially filtered reports that are pre-arranged for you to use. Let's stick with the TAFs detail tab and search for the Marine Mammal Commission. At the top left, you'll see Agency, Marine Mammal Commission, Bureau, Marine Mammal Commission. Larger agencies are going to have multiple bureaus. Account, we see salaries and expenses, and TAFs. This specific TAFs identifier includes the fiscal year, in this case 2024. This is an annual fund, so this is the first year of the appropriation as we're looking at it as of 2024. You'll see the 4 sections laid out. Section 1, Budgetary Resources. In this example, you can see the appropriations broken out by various types. Section 2, Status of Budgetary Resources. This shows new obligations and unobligated balances broken out by apportionment category and spending authority. One thing to note, sometimes these SF-133s will have memo accounts thrown in. They don't add to the total, they're just for informational purposes. You'll see that line 1910, total budgetary resources, equals line 2500, total budgetary resources. That's how it should be. The memo accounts are listed separately below the totals. Section 3, change in obligated balance. This section shows how obligated balances change during the period. Section 4, budget authority and outlays net. You'll see discretionary budget authority outlays from new authority, total outlays, budget authority net, outlays net. Below that, you'll have some additional memo accounts, tracking changes over time. So you'll see here, this is all one task for the entire fiscal year of 2024. By month, you can see the numbers update from November through September at the year end and how the numbers change as the year progresses. Now we'll scroll down a bit and you'll see the same Marine Mammal Commission, but now it's for the fiscal year 2023 annual fund. Since we're looking at this in fiscal year 24, these funds are in their first year of expiration. Similarly, you'll see the information has changed to reflect expired status. We'll keep scrolling and you'll see different TAFs. One for 2022, which is the second year of expiration. 2021, the third year of expiration. 2020, the fourth year of expiration. And 2019, the fifth year of expiration. You'll notice we don't go further back. Why? Any funds from year 2018 or earlier would be canceled by the time we entered fiscal year 2024. And the 2019 fund would show the transitioning flag to canceling in September. Similarly, the 2024 fund we looked at first would show the transitioning flag to expiring in September. You can explore various agencies and see their reports. You'll see how the data changes month to month, which is very interesting. You'll also notice when continuing resolutions are in effect, when additional budgetary authority might be enacted, and the various changes throughout the year for the agency. Conclusion. That takes us to the end of our overview of the SF-133. In future courses, we'll cover how the SF-133 and SF-132 are reconciled, a process most agencies perform every month. Thank you again for attending. This is Rob, and if you like high-quality, federal-focused CPE, check us out at federalfinancecpe.com, where you can earn NASBA-approved credits for this material.